Good morning, everybody. This is episode 3 of season 2, I guess, as we're calling it, James, of the Broker Breakdown. Myself, Mike, alongside James, as always. And we are back with a episode that's got a lot of substance to it with recent stuff going on in the news. Lots of unfortunate things happening with kind of larger businesses. So jumping into it, it's going to be more about the commercial realm, more specifically commercial property insurance and commercial liability insurance. So we did an episode previously with commercial autos, or at least touched on them, about the importance of certain coverages and limits and whatnot. We wanted to go into a little bit deeper on the commercial property side, especially with events that do happen within businesses. So it's all about commercial insurance today, James.
Yes, my quote unquote, I guess, realm that I very, very much enjoy spending a lot more time in, but I just find it a little bit more interesting than the auto and home side. But yeah, it's a conversation that obviously has a lot of news or eyes on right now, especially in the Ontario news. Even I think Canadian wide, actually, it got a little bit of interest as well. So, but the big one, and again, this isn't just one of many that obviously go on, but again, this is kind of just the recent one. But the big fire that happened in St. Catharines earlier last week, Mike, and at first they did say that the gentleman that was there was severely injured and brought to hospital, but it ended up actually being that he lost his life after the fact. So prayers out to him and his family. And yeah, it looks like a massive facility. I don't really know much about the company, but yeah, it's just like from looking at the video and looking at the news article and stuff, just this massive fire, Mike.
Yeah, I don't know. I don't know too much about it either, and obviously don't want to comment on that stuff because it's still very fresh. As a local thing here, hits home for us. I know I'm as a kind of a Niagara resident as well, so it's things you do not see every day by any means, of that magnitude, anyways. But yeah, I mean, these types, not the same type with the fires and explosions and whatnot, but these unfortunately claims do happen commercially, right? Industrial plants, larger commercial operations. There's so much, I guess, risk exposure to them, right? This is why, in general, commercial insurance is so important, especially for anything in that larger realm with machinery, heavy truck operation, chemicals. Like, there's so many different realms that are dangerous.
Yeah, and I think the big thing that I always say to people, and again, we have to you have to almost, like we were talking last week with Doug there, almost like mitigate the risk, like we have with Mitigation Mike here. Obviously there's going to be different sorts of risks, like your retail store that sells clothing. Obviously, your liability, you don't need to have 5, 10, 20 million liability. Like, that's a pretty given. But I get like a lot of people, like, like how when people, like, let's say, like, work in a trade, Mike, and they like do side jobs, and they're like, oh, I don't need insurance because nothing's ever going to happen because it's a side job. I'm doing someone a favor. This is, like, for me, like a big, like, red flag, because I kind of look at something like this and it's like, accidents happen. Like, we have to take these things seriously. And, like, every day, like, it's not a given that you're not going to walk into someone's house, trip and fall, or do something. And you never know. Like, you could buy a part from any hardware store and the part might be faulty. You put the part into their home, 3 weeks later the part bursts and there's massive damage in their home, right? So I would
right
with, like, we always look back at these things, and you know what, we have to realize accidents happen. And when you have an accident, you want to make sure that you're covered properly, because at the end of the day, especially like an event like this, because now they're dealing with a death involved. So again, very, very, very extreme circumstance. Obviously an accident where now someone's life has been taken. But again, like, you need to make sure that you're covered properly in events like this, because there's going to be a massive trickle down effect now with insurance, because obviously they got to go back to insurance companies. Like the whole, like from looking at the video and looking at the pictures, Mike, like the whole facility is like destroyed.
Right. Yeah. I've only seen a few clips here and there. I remember I went to a commercial kind of workshop, as I'll call it, a couple of years back, hosted by an insurance company. And I remember, quite a few little tidbits I picked up from it. But one of the biggest things that I remember being chatted about or kind of going through with these other commercial individuals was that the liability limit you choose to have for your policy as a client perspective, not for me as a broker, but as the client, it's really up to yourself to find the right amount that fits kind of what your exposure is, right? So we recommend certain types, and obviously you can have a conversation with your agent or broker about what that limit might look like. But I specifically remember, anyways, as part of this workshop, the gentleman doing it basically said, guys, there is no right amount of liability coverage for businesses. It's whatever the client feels. So for example, it could be 5 million, but maybe they don't actually require that. That's just something they want. And I remember being like, wow, like, it's interesting to think about. Like, even though we can recommend certain limits, the proper limit is whatever the client's comfortable with. And the end result of that conversation was that they kind of choose what they want, right? So even maybe something that doesn't need a higher limit, like for example, something small, like a very low risk operation. I can't think of anything at the moment specifically, but you run, a store with no machinery. You run a store with, or maybe an online business. You know what I mean? Like something that's not got that same level of exposure, but you still have that 3, 4, 5 million. It's interesting that I remember basically the end of the conversation is that they kind of choose it, right? Because we don't know what's going to happen if there's ever a lawsuit in a claim, right? You don't know what those limits are going to entail. You don't know what the payouts are going to be or what kind of expenses are incurred in a claim. So it was interesting to pick that up, because I think especially for commercial, it hits home a little harder, because a lot of people that, operate and own businesses, whether they're large or small scale, it's their livelihood, right? It's how they make their money. It's what they've worked on for 1, 5, 25, 50 years. It's generational wealth. It's all of those things.
Yeah, you hit it right on the head there, saying it's their livelihood, right? So in the event of something happening, you want to make sure your livelihood's protected, because at the end of the day, if a claim happens and you're not properly protected, you could possibly either be shut down or basically run out of town, right? Because again, lawyers are going to go after, especially in commercial claims like that. Like, yeah,
Right.
you're gonna see massive lawsuits and whatnot, because you're basically like an entity and operating. So,
Well, you have more assets too, right? So the one thing about, I know, commercial, just as a very general point, not specific to any specific industry and or type of business, but I know that from a legal perspective, if you're running a successful business in sorts, and you have your personal assets and kind of your business assets and whatnot, I mean, your business has a ton of exposure, right? And you want to separate that liability from your personal, because the last thing you want is, running that business and then your home is garnished or taken in some way as a respect of a business claim, right? And I haven't been a part of those, or you don't hear about those very, very often, but I'm sure they must happen in a small percentage of those very catastrophic claims, right? So what's the right limit? If you say, Mike, is it 2 million? Is it 5? Is it 10? I guess the answer is, I don't think there is a right limit. I think it's just whatever you're willing to pay at the end of the day as well, right? Because there's a common misconception that, having those higher limits costs you a ton of extra money. And in my experience, that's not always the case.
yeah, that's like we were talking before the podcast. It's almost like a misconception, right? Like going from the 2 to 5 million liability mark in commercial, there's really not much of a price difference and jump up. Kind of going back to what you were saying, there isn't really a right limit for liability. I would agree. I would say if your broker is like in the commercial realm, obviously they should have kind of like an idea of the risk, right? Like if we're looking at, like, for example, like a doctor's office, I'm not going to give a doctor's office $1 million liability. Like that's silly, right?
Right.
So you kind of, I almost kind of, for me, when I'm looking at commercial, like files, I'm kind of looking at, you know what, this is what the industry is kind of looking at right now. What have I kind of done in the past? And then kind of go from there. Again, you kind of have to look at the risk and say, okay, like how much risk does this have compared to something else in the industry? What have I done in the past? What have I done in the past with similar businesses? Has anything come up in the news recently or in the industry where, you know what, there's been massive claims, or there's been one claim and now it's going to basically impact the whole industry? So that's how I kind of look at it. Again, you kind of have to look at it and say, you know what, like this bakery, for example, is not going to have as much risk as the, I don't know, doctor's office down the road that has 100, 200 clients walking in every single day, obviously giving medical advice to them. And again, if like potentially if something happens, clients could get really, really sick and possibly die from, right? So again, just kind of looking at the risk and making sure you're basically calculating the risks that are based off that business as well is super, super important.
Yeah. I mean, it's hard to say what the right amount though is too, because someone, especially with our society being more of that, you know, a very litigious society now, that it really hasn't been historically, but we're kind of aiming and going that way, trending that way for sure. I mean, businesses have more exposure, right? So anyone, it's funny. There's a lot, I know especially since COVID, I know a lot of different people, and most do, that have either started up a business or taken on an entrepreneurial venture in some sorts, whether that's through the trades or baking or, you know, anything from social media, graphic design. There's so many different things that I've talked with people that have kind of done it on their own or gone out with a partner, come small, right? But they had worked with a company before. Anyways, the point being was that a lot of these people are doing it under maybe like a personal name, for example, right? It's more of a startup. So they haven't gone through all of the things about maybe the tax implications or the insurance side of things, but they really need to think about those things, right? There should almost be like a course for, you know, if you're going to start a business in any industry, these are I don't even know, let's say 5 or 10 things you probably should reinvest in for your business, right?
Like kind of like in school where they should teach you more about like finances and stuff and actual real world like skills, kind of like having like an entrepreneurial. I know there probably are some, and again, like you can go to college and university and kind of study business and stuff, but it's a little bit different, right? Like, yeah, there should be. But going back to what you just said, small businesses, is it ever too small to not have it insured? So like I was saying before, let's say, Mike, you're a plumber, but you work for company A, but you want to do side jobs on the weekend. Is it ever too small to not have liability coverage? Because again, if you're doing a side job, and let's say you're doing, I don't know, let's say you're doing 5 side jobs a month and you're going to 5 homes, you're doing someone's plumbing, whatever it might be. Is it ever too small to not have liability insurance at that point?
Well, I guess the question would be, are you representing the company you work for, or are you doing it under your own kind of name at that point?
I would say, yeah, you're doing it under your own name because you're doing side jobs, basically.
Right, like you're not going out with like a company vehicle representing the company you work for.
No, you're basically just doing it for like, even for like a favor. Like I know a lot of people do it for like their friends and stuff. But again, there's still risks to that, right? Like your friend could turn around and say, you know what, you didn't do this properly and then cause damage in my home. I'm going to sue you for that, right? So,
well, this goes a little bit out of the realm of commercial, because when you think about it, home insurance in general, we all have liability that extends from our home or renters or condo, whatever type of property we have. When you're looking at liability insurance, you're technically responsible for insuring against visitors, invitees, even people that unfortunately are looking to, like, you know, burglarize your home. You're responsible for ensuring the kind of well-being of people on your property at any given time. So let's use that example. Someone comes over on the weekend to help you do, your roof or some plumbing or electrical or any type of work. I mean, your home insurance policy is there to protect the liability from them injuring themselves and then trying to sue you ultimately, right? So you're inviting them in, they injure themselves the same way that a mailman can slip on your front doorstep. Your liability is there to protect from the legal aspects of that incident, right? So, I mean, that kind of separates a little bit different than a buddy coming over that's just doing, maybe some work for you, but it's not like a commercial thing. Like you said, he's just doing this here and there, and it's more of a favor than it is an actual job. I think the difference is when you're operating as like a business per se, and you're doing it for financial gain, and you're coming over and you're doing it, should you have, a general commercial liability policy in place? The answer is probably yes, right? From a safety perspective. But then again, it's kind of a gray area, right? Because in the event of a claim, and again, me and James are not claims adjusters, we're brokers, we're trying to give you the proper advice. But what's the deciding factor between when you're just a buddy doing a job for a friend that has experience versus like a hired professional that you want proof of insurance from,
exactly.
Right? What's the difference there?
Exactly. Yeah. I think at any point, if you're stepping into someone else's home, you should definitely have coverage, because again, as we saw with these events, and again, this is a much larger company, large property, large building, but still, there's always that risk of an accident happening. And again, at the end of the day, if you're even doing side jobs, and again, like I was saying earlier in the episode, you can go to any hardware store and you can buy pieces, electrical, plumbing, whatever it might be, and it could be faulty. You don't know until you actually put it in. Like the store could be selling it, but at the end of the day, like if it's not manufactured properly, there could be an issue with it. So I always say, if you're being hired and there's going to be money exchanged, then yes, you should probably be looking into some sort of liability coverage. Again, there's so many different coverages when it comes to commercial insurance, but at least by the minimum have liability, because at the end of the day, you don't want to be walking to someone's home and then a month, 2 months, 3 months, 5 months down the road go, you know what? You came in, you did some work for us. There was a leak. You did some electrical work for us. There was a little bit of electrical fire, and now we kind of want you to pay for those damages. And then it turns into a lawsuit possibly. And at the end of the day, either you're paying out of pocket or you could have gone through insurance and your insurance kind of helped you out with it. So yeah, just again, accidents are accidents, but at the end of the day, if there is an accident, we want to make sure that that accident is going to be covered.
And one of the things too is that going into this kind of trend where more people are at least attempting to sue, right, to get actual compensation in one aspect or another. As those trends continue on, it's going to be that we're going to require insurance for multiple different reasons. I know we all typically have it for home and auto, and like we mentioned today, more on the commercial side, but the level of coverage you have is going to be the bigger deciding factor, right? Because we obviously nobody wants a claim to happen, but unfortunately they do. So it's the big stuff, the big scary stuff that can really wreck that generational wealth, or that the large business you've worked for 20 years, right? Those are the things I think we really want to hit home on.
Yeah, exactly. And I think you said it perfectly where you said that people are more and more likely to sue now. Like I know we say it all the time on the personal side, Mike, with liability, that we always say liability has changed so much in the last 20 years. Like maybe 20, 30 years ago, you can get away with $500,000, $1 million liability. But now, like the industry standard right now is minimum 2 million. So if you're quoting anything less than 2 million liability, you're already behind the 8 ball, because you're not being protected with how much you should actually have. And again, the world that we're living in now, everything is being sued. Basically, everyone's suing everyone for everything. And if I'll take a great example of an industry that's been wrecked by this is snow removal. Snow removal, even when I first got into the industry, snow removal was so easy to place. It was very inexpensive. Like new people into the industry could easily come into it. They could pay $2,000-3,000 for the year. It was super simple. But now, with how the rules worked, even like a few years ago, the rules were basically that if you had a trip or fall, you could basically sue up to 2 years after the claim. So I could fall today, Mike. Let's say I come over to your house and I fall on your steps. I could literally wait 2 years to sue. So I could wait until 2025 to sue you, Mike. They ended up changing that rule. I believe it was 2 years ago now. So you only the claim can only be placed 60 days after the fall. So that has helped, but it has basically shown that the insurance industry, a lot of companies have gone out of snow removal because, again, how many claims we were seeing on that side of things, because everyone, and again, I don't want to get into the whole legitimate, non-legitimate claims because that's a whole other story. We could go on and talk about that for probably a whole day, because I personally, in a little short note, I do believe some of those claims are misconcepted, if they're not like almost fraudulent claims. But again, it hurt that industry. Like anyone trying to get into the industry was paying. Like I know I had clients that went from like $3,000 to $10,000 a year because that industry was so focused on, because there were so many liability claims in the last like 5 years.
I don't even know if it's, I mean, I don't know enough from the insurance company side to like, make any legitimate points there, aside from the fact that it's got to be completely unprofitable from an insurance company's perspective, because I know as well from, I haven't really quoted out the risks, but from conversations within the broker channel and talking to people that have been, looking at that stuff far longer than I have, it just seems like the prices, like you mentioned, skyrocketed, right? You're talking double or triple what it was the previous year. You're talking about even eligibility rules, right? It's not like, have you been plowing for 1 year? It's have you been doing this for 5 years? Show me proof of insurance for those 5 years through like a letter or whatnot. It's everything from, what type of vehicles are you driving, to what's your driving record look like, to, all these things to be eligible for a policy. And then even when you can prove that the risk, you as a driver, and that you've been doing this is a good risk, the price is still significantly higher just for the fact that they're not making enough premium from these massive slip and fall claims, basically, right? That's what it's coming down to.
I remember I had one when I first came into the broker channel, because I came from being like a direct writer. I remember I had one that the guy's business, I believe he said he was paying like $30,000 a year. And again, he was a pretty big business in Southern Ontario. He was making well over $1 million a year, I believe it was, with his snow removal business. And then I remember him calling me and telling me that his premium shot from $30,000, Mike, to $150,000 in 1 year, just because he did snow removal. Like
I can't even comprehend that.
How insane! Like how do people think that you can run a business paying $150,000 for? And again, I'm not saying like bigger businesses obviously are going to pay more money. There's more employees. There's obviously more revenue. There's more risk to that. But again, like how can you basically suffice a $30,000 to $120,000 increase? That's ludicrous.
Right. You know what though? It does speak volumes to the fact that if insurance companies, would like to make money in a specified area, and let's use snow removal, and that increase of 5 times the previous year was warranted or quoted, it says 2 things. It says, one, they know the marketplace with respect to like who's in there, who's competitive, who's actually taking on these people. And 2, you're basically in essence, you're charging enough for the risk. You're basically charging the client enough. So when the claim happens, you're almost part compensating at that part, right? It's almost like it's the same mindset, but on a different scale as motorcycle insurance, right? So bike insurance, anyone that rides a bike, basically, if you look at your actual policy and your premium, you'll notice that the majority of what you pay for is a section called accident benefits. So basically, the insurance company is charging you for, and this is, I'll just use an annual number, but they're charging you enough on an annual perspective. So when you are involved in a claim, fingers crossed, knock on wood, I'm doing all this stuff behind the scenes, that you lay the bike down and now you're injured and you have to get, rehab and physio for a number of years potentially. You're basically paying for it in essence. They're basically saying you're going to get injured in a bike accident no matter what. This is why you're paying 90% of your premium towards the injury benefits. It's kind of the same way that snow removal is done. It's almost like saying there's going to be someone that has a slip and fall in your parking lot that you're plowing. So as a result, this is why you're paying higher, because that's going to equate to a lawsuit. That's kind of, it's the same thing, just on a grander scale.
Yeah, it's to me, it's I don't ever like to see when insurance companies and the industry almost push businesses away and almost like disregard people to like not want to start businesses up, because we're in that kind of world right now where we've been in this hard market for so many years now, and like people that want to start new businesses, it's almost like, like when you get hired for a job or you interview for a job, like right out of like college, and they're like, oh, you went to college, great, but we also want you to have 25 years of experience, like just because, like, as the joke.
I've seen those. I've seen the resumes where it's like entry level position. It's going to be $40K, but the previous experience is 10 plus years, and it's entry level.
Yeah, that's kind of how I feel like some insurance like industries or companies like rate some businesses, is like, yeah, like you're a new venture is what they like to call it, but where's your 3 to 5 years experience? Where's your resume? Where's your like cover letter from your other company showing that like you were doing is exactly what you're doing now? And it's like, you're just basically like discouraging people to start businesses, and especially in the economy that we have right now, like we need to like start like boosting it up a little bit, but like there's no drive for insurance companies to take on these businesses. And I understand, obviously, new business, we don't even know if it's going to be successful. It could close. The biggest example that I always use is like restaurants. I think it's like 70% of restaurants close within the first 3 years of opening. So again, like from an insurance company standpoint, like there's like, where's the profitability there, right? Like,
Right.
So I understand, but at the same time, like there's got to be a time that we need to start loosening up some of these rules, allowing people to start businesses, allowing insurance companies to actually insure them for a reasonable amount, so people actually want to get out there again and open businesses up and help like the economy kind of start growing again, especially from the last few years where our economy's just kind of, almost crumbled.
Right. Well, and you know what? I think there's a reason why, like you said earlier, there's a reason why when you're starting up like a new venture, for example, and whatever you're doing, a lot of people might even disregard that small commercial general liability policy for the fact that you're almost told that you have to have this. Your annual revenue that first year for someone starting up might only be like 20 or 30 or 40 grand. Like lots of startups you're basically putting your own money in, hoping to basically weather that storm until you can get to a kind of a scaling or growing phase, right? So to be told, hey, go look at these 5 things, right? Get an accountant, insurance, blah, blah, blah. And as going through that process, it's like, it's not $1,000 for the insurance. It's, it's going to cost you $2,500 or $3,000. I mean, an average person's going to be deterred at that point, right? They're going to say, well, I'll take that risk on myself, even though they really don't want to. They almost feel obligated to, right? In that case.
Yeah, you'd be completely surprised of how many people I talk to on a daily basis, Mike, that are like small businesses, and they just straight up like I would rather eat a lawsuit than pay for insurance, because as a startup company, it costs way too much money to have a startup. And again, I would say some of those are misconcepted. Like some people just don't want to pay the extra money for insurance, but there are some industries that, yes, to start into that industry and have insurance, it is a lot of money. And the great example, like I said, it was like snow removal. Restaurants were as well recently. They have started to come down a little bit, but yeah, there are some industries where it's like, whoa, like this is a lot of money for insurance.
Yeah, yeah. And you know what? There is some truth to some of it. Some of the industries clearly are going to have more exposure than others. And the insurance companies, they have an office building of people looking at these behind the scenes with the rates and the claims and kind of adjusting and saying, this is what we need to in order to make money and also have, this client on the books sort of thing. So I get it, but I also see the other side of it too, right? Which is how can you, with uninsured individuals, that general pool for that specific sector isn't as much, right? Because you don't have as many people generating money into that pool as well.
Exactly.
Which is basically what insurance is, right? I mean, it's a massive pool of money.
It is.
And the idea is that the premise behind it is that the losses of the few people are, basically paid out by the massive pool, which is paid into by the rest of us. So you almost need, with to go back to the snow removal one, with less people paying into that, by being able to not either get insurance or choosing not to get out of the business altogether, that pool shrinks. So those that need it or continue it are end up paying more themselves, almost as like a self-insurance in a sense, right? They're reinsuring it themselves.
Exactly. Yeah. And a lot of people have gotten out of that industry. Like, and a lot of people that I've talked to that were doing it just like as kind of like a side thing, they just don't.
Right.
Either they do it and they're not insured, or they just don't do it because, again, the premiums are just sky high.
Yeah, and I know a lot of landscapers do that in the winter, right? They'll do like landscaping and they'll do snow removal in the winter, and I don't know. I don't know if that's still a very common thing, or if that you're starting to see less guys do that in the winter at this point.
From what I see is that they just don't insure the snow removal side. They'll do the landscaping all summer and all spring and fall, and then they'll just say, "Oh, well, we don't do anything during the winter," but we all know they do. They just don't insure it because they know as consumers that they can't find they won't be able to find a good company that will basically not charge them an arm and a leg to do the snow removal side. So it's not worth them to insure. Some of them have cut it out completely. Like, don't get me wrong, but a lot of people, obviously, they're not going to walk away from jobs, so they just don't tell their insurance company that they still do snow removal, and they'll just very risky. But
yeah.
Kind of moving on to the last little bit of this episode. I know we were talking before the episode, but kind of looking back at some of these like news articles, like there's no surprise that like these accidents happen. Like the St. Catharines fire isn't the first, but like what is going to be the trickle down effect for some of this stuff? Because like I was showing you earlier, Mike, like looking back at some of these articles, like construction worker taken to hospital, that was in November of 2022. Man in Guelph dies in industrial accident, that's October 2022. Another man taken to hospital in Mississauga, October 2022. Another man taken to hospital, July 2022, industrial accident. So with all these things happening in the last, 6 months, let's say last year, like what do we see the trickle-down effect going to be for insurance? Is there going to be like there's got to be something that's going to have to change, because again, all these things, doesn't matter if it's injury or death, there's still going to be lawsuits that are going to come to this. Insurance is obviously going to step in, hopefully, if their business is insured. So are we going to see like a trickle-down effect where, yes, there's been a lot of injuries, there's been a lot of claims? Are we going to see increases to insurance? Are there going to be companies that basically back out of certain industries? Because again, all these are basically industrial, construction, there are deaths like look for another one here. This is going back to May of 2022, but like a quarry work site, like one dead, one seriously injured.
Right.
Like, are we going to see a trickle down effect because of this happening?
Well, I mean, you could argue that that's always been the case, though, right? Like, I mean, any large scale manufacturing industrial facilities where there's lots of machinery, there's lots of opportunity for either operator failure or like we're talking big facilities with lots of exposure. That's always been the case. So it's going to be more. I think what's going to happen, and you already see it with a lot of big companies, is there's more money invested into just training and overall the continuing education within employees, whether that's machinery operation or anything else, basically being mandated by the company. But I also think you might start seeing it by insurance companies, right, in the way of underwriting. So basically saying these are things you need to do in order to basically mitigate further losses from happening in one way or another. And I think that's what I see happening. I think it already happens on the larger scale. And this is something that I only say kind of general thoughts on because obviously I don't insure large. I'm not nearly competent in the large things. I know there's obviously large commercial brokers that probably are. But I guess the point was going to be, how do we offset those things from happening? Unfortunately, they always do happen. They probably continue.
Yeah, they're accidents.
Right. Accidents just happen, right? And they're very tragic and they're very upsetting. And it just turns into whatever the next stages are, right?
Yeah, it's I like obviously if there's going to be more claims, there's more lawsuits, obviously you're going to see a spike in insurance. Like there's always a correlation between the two. So, but the thing that kind of worries me is that even the one that like almost hits home for me too, being from Hamilton, is that the one that was in the summertime with the National Steel car, and they had a worker die. But then looking back, it's like it's not even their first time that they've had someone die there. They've had someone die in 2021, 2020. So literally in the last 3 years, they've had 3 workplace deaths there. And again, if you even let's even look back at like, again, I haven't done the research on it, but if you probably look into it, how many deaths do you think we can probably pick up in like DeFasco, Stelco, those kind of areas, big companies that are in Hamilton, right? So like what is actually being done? Because like I for me it's just like almost alarming that like I'm looking at all these articles and it's like accident after accident after accident. Is it just poor like workplace like training? Is it like, but again, it's very hard to even this one. I know this one's really not Ontario, but like Canadian. Remember the Kelowna crane collapse that was that was recent in Kelowna in November? That the whole crane collapsed on the work site. I saw something
like that.
Like, again, it just I feel like, yeah, accidents, like you said, accidents are accidents. We can obviously not like you can't stop accidents from happening, but the trickle down effect to these that are going to happen in insurance now is I just feel like are going to be so significant, because you're going to find that companies are going to look at all these events happening and they're going to go, you know what, this is something that we don't want to be in right now. And they're like, consumers are going to have way less options because there's so much going on when it comes to accidents, like construction. I've already seen on my end where like companies don't want to take certain kind of construction because it's just there's too high of a risk for it. So I just find there is going to be a big trickle down effect to this. There's so many injuries going on. And again, the one in St. Catharines, yes, the guy, like, it's even worse because the guy died. But I don't see how this is a good thing for insurance at all.
Yeah. I don't know. I guess time tells. And I mean, the only way to offset that is by having the right premium paid, in essence, basically saying you have the right coverage in place. You know, whoever's representing you is given, you know, maybe industry trending changes. So giving, as trends change, the coverages kind of need to map to that same trend in order to cover the exposure. And as a result, everyone starts paying a little bit more on their insurance policies, but for reasons, right? For proper reasons. And that's and as insurance companies continue to kind of grow in scale, they're gonna. I think you're gonna see just lots of either know what they want appetite wise for a client, especially in the commercial space, or just get out of other spaces altogether. Like you said, right? We're not making money here. We're not profitable here. We don't know how to underwrite this. It's not sufficient, and they'll kind of go a different direction, right? That's been happening low key on both commercial and personal for insurance for years, James. So it's not, I don't think it's going to change at all, but it's definitely going to continue to trend that way, I guess.
Yeah,
is what I'll say.
it's gonna accelerate the process basically.
It already happens with lots of stuff, right? Every insurance company kind of decides where they want to go direction wise, and then puts their resources towards how do we make more in this specific sector. That's always been the case. It's appetites change all the time, and that's just how it is.
Yeah, no, 100%. But yeah, just kind of wrapping up, I think like the key point that we did want to make with this episode is make sure you're sitting down with your broker, your agent, whoever it might be, and make sure you're just having that conversation to review like your policy and what you're actually protected for on the commercial side. Because at the end of the day, like me and Mike said, accidents are accidents. They do happen. But at the end of the day, you want to make sure that you're covered properly. You don't want to just be buying a product just to have it and say, look at this piece of paper that I have that now says I'm covered, and like you don't really know what you're even covered for. So even if it's just a 5-10 minute conversation you have with your broker, if you want to call myself and Mike and we can have that conversation with you, I always do it with clients on the commercial side. I'll literally take their commercial policy and I'll review it with them, and I'll go, you know what, like this is where your policy's strong. Might be some weak points. This is what we should be doing with it, and kind of go from there. Because like I said, at the end of the day, every business is different. There's not one business on planet Earth that's the exact same. It doesn't matter if me and Mike have two businesses that both sell t-shirts, or me and Mike have two businesses that are both bakeries. Those businesses are completely different, and again, have to be reviewed as a risk differently. I could have 5 employees, Mike could have 50 employees. Like that's a huge risk change. Again, you're having 10 times the amount of employees that I have, right? So again, I would just say always make sure you're reviewing it. If there's going to be a massive change in your business structure too, make sure you are telling your insurance broker or an agent, because at the end of the day, if there is a massive change in risk, if you are hiring all of a sudden 10 extra employees, you're moving to a new location, you're opening a second location, that is massive information that needs to be disclosed to your insurance company.
Yeah, I mean, commercially speaking, not personal, but more on the commercial side as this episode, I mean, not even annual, but like I guess one of the tips I would say is if your business has changed in any aspect with respect to employees, revenue, operations, the adding or removing of machinery, trucks, tools, etc., it's worth 2 minutes with whoever you trust, because there are lots of different exclusions that are on policies. There's also lots of coverages that are not inexpensive that you should be aware of. I hope, as an industry, it doesn't turn into this just naive mindset that every policies are generalized, because there's lots of coverages that insurance companies offer. Every company is slightly different. So I think talking to your trusted professional is what I would end off with, just making sure that if any of those things I just mentioned, right? So operations, employees, revenues, equipment, if any of that stuff changes, a 2-minute call saying, hey, I've bought a skid steer, or, you know what I mean? Or I've looking at this from last year, my revenue is twice as much. All of these have an impact in some way. So I think we've touched on that in a previous episode, but as an ending note from my side, I guess I will always end off saying that on the commercial front.
Yeah, no, great points. And again, if it takes you 2 minutes, great. I would just have that conversation and making sure that everything's accurate and up to date. Because again, as time goes by, obviously you want your business to grow. And if it's growing, obviously things are changing. So just making sure that it's disclosed. And again, if you're adding $25,000 in tools, you probably want to add that onto your policy. So great points. Great points. But a little change to the schedule, actually, now that we're kind of ending off here. Next week, we were supposed to have another special guest on the show. We actually have pushed that back 1 week. So Kim Pham will be on. Her episode will be recording on February 1st, and then her episode will go out on the 7th. So, just 1 week that we had to push her back. She just had something that came up, so little change there. But yeah, just our big goal for this year was obviously to get more and more people on the episode. I think with last episode, if you haven't checked it out, check it out with Doug from Wayne Pittman Ford. We talked a lot about kind of the ever-changing landscape of the auto industry, electric vehicles, all that kind of fun stuff. I think a lot of people have already listened to it, have been loving it because the analytics to it actually shows it's probably going to be one of our biggest shows so far. And again, thank you to Doug for coming on and giving us some amazing points and really some good talking points during that episode. So thank you again for him for taking the time. But yeah, that was our biggest goal, I think, Mike, this year, was to get more people on the show. So I know for us, I think we were saying at least like one per month. So Doug was kind of our January guy. I know Kim, I guess, gets pushed into February. But again, just kind of drive up that guest list so that we can kind of get, I don't know, a different view. Just instead of just me and Mike all the time, we kind of get that outsider view on things. So yeah, I'm just kind of really excited to have her on because, again, some of the things that she does social media-wise is really, really interesting. And, again, she can just kind of talk from a different perspective and actually a different company working for Mazda and kind of what their ideas are moving forward. So I'm really excited about that, Mike.
Yeah, it'll be great to pick her brain, kind of see how she implements that to the dealer and the auto side of things.
Yeah, but again, thank you guys for tuning in. Again, we really appreciate it. If you guys haven't already known, we have moved on to YouTube as well. So check us out there. Subscribe to the YouTube channel so you guys get notifications every time an episode does come out. It's literally going to be synced exactly with how it is now. So we'll record on Wednesdays and the video will go out. Well, I guess the audio will go out on the Tuesday. So just make sure you're subscribing so you get that notification. And I guess we guys will check you guys next week on the next episode of the Broker Breakdown.